Hi everyone, Mike Flores here on behalf of iTradingU. We're going to look at the charts for the week. We're going to start with the EMini Dow Jones futures contract. Looking here, we see over the past week we had a bit of a sell-off in the market, but yet we still closed above this support zone here, this double bottom, and we're above the 50-day and 200-day moving averages. What I would like to see happen for this trend to resume, this uptrend to resume, is break to new highs and obviously the ADX to turn blue and back above 20. Now notice here today, we talked about this formation last week. This is an inside day here, this green bar. We would like to see how this plays out tomorrow. Now, I'm not going to play the inside day on YM because I'm going to prefer to play it on EMini SP futures. So let's have a look at EMini SP futures. Now looking at EMini SP futures, we can see the formation looks very similar. So why am I playing this one instead of the other one? Good question. All right. Well, the reason is this trend is a little bit stronger in EMini SP rather than EMini Dow. Also, there's a seasonal short period in play for the Dow that lasts for another 10 days. So that's giving me more confidence to play the EMini SP, especially on a break to the upside. But notice here, there's also an inside day. So how I'll play this is I'll put an order to buy on a break of the high with my stop at the low, or sell on a break of the low with my stop at the high. I'd probably put more weighting to a break on the upside in terms of risk management because we're still in an uptrend, and probably half risk on a break to the downside. Because like I said, the trend is our friend and we want to go where the market is showing us right now, that more strength lies. Let's go to the 10-year Treasury note. Here we're looking at the 10-year Treasury note, and we see that we had a mixed week last week, mostly ended week. We still closed above the 50-day moving average. And notice that the ADX is declining and in a trendless period below 20. So at the moment, I'm just stalking this market. Now, if this market continues to get weak, that would be a good sign for strength in the stocks. Remember, we spoke before that people sell the less risky asset, in this case the bonds, to buy the riskier asset, which in this case would be stocks. Let's move over to gold. Not too much happening here in gold. You know, gold did have a strong week last week, and part of that had to do with the Middle East, the tensions in the Middle East. But notice we're still below the 50-day and 200-day moving averages. We're just at that old neckline from the previous head and shoulders, and I'm really just going to watch this market. Obviously, if we can close above the 50-day and 200-day moving average, that's bullish for gold and probably bearish for stocks. That would we'd probably see that strength happening if there's more uncertainty in the Middle East with Iraq, or if, you know, the market gets spooked. So we'll keep an eye on that. Let's go over to the crude oil. Now, we talked about the crude last week, and we talked about getting long on a break of the 55-day high. And we see that that did happen, and we're way higher from there. So there's a little over $2 in this trade, and this is a really good trade for us. And we're in this on a break of 55-day high, and our stop would be somewhere at this low here. Now, right now I'm just watching this market, and I'm long, and that's it for now in the crude. Now let's look at heating oil. We talked about heating oil last week. This is an interesting one because last week we were looking at selling on a break of a 55-day low. Now that didn't happen. Remember, we said, you know, we had the tensions in the Middle East, in Iraq, and the market reversed and went the other way. We can see it broke the 55-day high, but it closed back below the open, or right at the open. This bar here, Friday's bar, would be considered what's called a gravestone doji in candlestick charting formations. This is usually a negative or a bearish formation. So after a rally, when you see a gravestone doji, you expect the market to go lower. Now, a gravestone doji is not the most, I would say, accurate or most heavily relied on formation, but it is something to be aware of. So we'll see what happens in the Middle East and how that plays on this market. Again, I wouldn't look to get long yet until it breaks back above and makes new highs. Notice the ADX is blue and in a trending period. So if that does happen, I will get long heating oil. But for now, we're just looking at it. And remember, we're already long crude. So if you're already long crude, you might not want to be long heating oil as well because they're very similar. But if we see it strengthen and break out and you want to get longer, the energy complex, then you can get long heating oil. All right, let's move over to foreign exchange. Looking at the foreign exchange market, I want to look at this market. We talked about this last week, the euro sterling. So looking at the euro sterling, we had an inside day that we were talking about last week, and we broke lower. So you would have gotten short there. Your stop would have been here. You would have never been stopped out. You'd have made some money on that trade. And remember I said if it closes on low, you can keep it another day. So here, if you would have kept it another day, you would have made a little bit of more cash. It went down and then closed a little bit lower than the previous day's low. So that would have been a winning trade. Now, also notice here, we've had 1, 2, 3, 4, 5, 6 bearish days in euro sterling. So this is the European currency versus the British currency. Now, this is a market that's gone really far pretty fast. So I'm not rushing to get shorter at this moment. And there's no formation or no entry for me that I see here. So I'm just watching this market now. But what we will look at is next the euro versus the dollar. Now looking at the euro versus the dollar, we can see that this market as well is weak. It's not as weak as versus sterling, but it is a weak market. Notice the ADX is above 40 and strengthening. Rarely do we get above 40 and stay there very long. So this is very concerning to me. Notice, look back here. You can see the market not really above 40 anytime within the past 6 or 7 months. So this is a big thing that's happening here. We want to see if this market can break lower on the 55-day and continue. Now, if it does break the 55-day low, I will get short a smaller size position only because the trend looks like it's coming near its end. Usually above 40, usually in the 40-50 range, we see a trend end, but it doesn't mean it will. So I will get short if it does break the 55-day low and put my stop at the high of the day. Notice we're below the 200-day and 50-day moving average as well. I would really love to see this, in order for this trend to continue, to see the 50-day cross over below the 200-day moving average. All right, let's look at the sterling, which is the other side, the sterling versus the dollar. Now this market is a really, really good market. So what's happening here? We're above the 50-day, we're above the 200-day, and we're flirting with the 55-day high. So this is the 55-day price high, this is the 50-day moving average, and the 200-day moving average. This looks pretty strong here. The market had a strong day. The ADX is up and getting stronger. If we can get above 20, that'd be really good. So I would prefer and look to get long the sterling versus getting short the euro, because the sterling looks like it's outperforming versus the dollar. So I'll put an order in to buy this with a break, on break of the high, with a stop at the low of Friday. And if this breaks out before the euro does on the downside, then I'll keep this position on and I'll take out the euro order. Just an extra set of things that you can do there. You don't have to trade both because they're pretty correlated. Now let's look at soybeans. So soybeans has had a rough go past few days, actually the past few weeks. We can see here we broke below the 50-day moving average, We broke below the 20-day low, the 20-day price low, and we had some pretty bad days last week. We closed Friday on an up note, but notice here what we have. We have an inside day on the soybeans. Now, this market is kind of in a neutral zone, right? We're below the 50-day, but above the 200-day, and we don't have any significant swing lows or swing highs that are really strong here. So we're really saying that, the inside day here, if I'm looking to play it, I'm putting small risk on each side. So again, I'd buy on a break of a high here or sell on a break of the low here. And now if I had to be one way or the other, I'd prefer for the market to break lower, just because we see the ADX turning up here above 20 as the market's gone down over the past few weeks. We'll see what the market gives us. Now I want to bring you guys to some stocks. Let's look at General Electric. So I'm looking at General Electric. Why? Well, I read an article the other day talking about how a lot of the big blue chip stocks are doing really well. And usually they tend to be a barometer for what the economy is going to do, the overall index, the markets are going to do. So usually when the big blue chip dividend paying stocks do well, there's a fear that the market will go down overall because people are putting money into steady income providing dividend paying stocks like GE, Tyco, and 3M. And let's look what we have here. So we have a 55-day high here. It's the only real play on GE that I would see right now. We're above the 50-day and the 200-day moving average. And the ADX is red, so it's gone sideways a bit. But you can see it's had a strong move, which coincides with the weakness in the overall market for the past few days. Let's go to Tyco. Looking at Tyco, we see here as well, it's had some strength, and we have another 55-day high set up. We're above the 50-day moving average and the 200-day moving average, and the ADX is strong. So this is another market. If this breaks these highs, I will get long this market. Now, again, why do people look at companies like Tyco, 3M, and GE? Well, because they're high dividend payers. I think they all pay around 2% dividend. Tyco might be a little bit less, but it's right around there. So people want, I guess, the sure bet when they fear the market's going to go down. So they exit the riskier stocks and they get into the stocks with less perceived risk. Finally, our last chart of the day, let's look at 3M. This is another big dividend paying stock, big blue chip stock. And we can see here it as well as flirting with its 55-day high. We can also see that it has an inside day as well. Now look, we're above the 50-day moving average, the 200-day moving average. We're in an uptrend. We can see this base supporting down here, right? We have these lows here. And we can see that we have these highs here. So we want to see it take out the highs and continue to move up. And then that would be a sign for us to pay attention to what happens to the overall market. So that's a new idea that we've talked about. We haven't talked about that before, people getting into dividend paying stocks, but it is very common and it is something that you want to look at when we're watching the markets. All right, as usual, I would like you guys to leave your comments, questions, concerns, and feedback on the comment section of this blog post. I hope you guys all have a great week. Happy Father's Day to all the fathers out there. And I look forward to speaking to you soon. On behalf of iTradingU, this is Mike Flores. Talk to you soon. Bye-bye.